Welcome, ladies and gentlemen, to Commodity-TV. And today we are in Austria. We are on vacation. As you can see, we are a little bit more leisure. And yeah, it's a beautiful day, sunny and blue sky. And behind us is the Lake Wörthersee. And yeah, we have fun, of course, but we don't want to miss the opportunity to talk to world's famous gold analyst and co-author of In Gold We Trust, Ronald Stöferle from Incrementum AG in Schaan. Ronnie, good morning and hi, how are you?
Hi, Jochen. Good to see you.
Good to see you.
It's not the worst place to do its work, so yeah.
That's correct. We hear somebody cutting grass in the background, but honestly, we will jump in about 30 minutes into that lake to have some fun and to cool down. But before we gotta talk about the markets, about gold, silver. Gold, silver, I like to start. Last year we had about $1,800. Today we are at $1,800. And it looks to me a little bit like that the market participants want to, let's say, hold the 1,800 level, because next week is exercise day at the Futures Exchange. And what's your take on gold and especially silver?
Well, if we compare the current market setup, especially sentiment, commitment of traders report, to last year's status, I would say it's a pretty interesting setup. Because last year sentiment was already extremely positive. We had the run up from 1800 up to the new all-time high at 2075. Now nobody really cares about gold. So it's like one of the most boring things to talk about. And I like that. I actually like that neutral, slightly negative setup. So from my point of view, it's an excellent starting point. We see that there's lots of physical demand kicking in. We see lots of physical deliveries. It's 3 to 5 times higher than usually. We see that central banks continue to buy. We saw, I think, Brazil was buying 40 tons. Hungary is buying. Russia was buying. So from my point of view, it's a great setup. And I think that 1 year from now, we will be at significantly higher price levels. We should not forget that now the best seasonal phase starts. In the last 20 years, I think in 18 years out of that 20 years, gold performed very well in the third quarter. So, yeah.
So 2,200, 2,400?
I think it's possible by the end of the year. Actually, in this year's In Gold We Trust report, I've got a copy here.
Not to forget.
It's quite a brick. Yeah, you have to read it during your vacation.
I do that for sure.
The full version. So I think in our model we said $2,200 would be the option implied target price for the end of the year, and I think that's definitely possible by the end of the year. But most importantly, gold is in a bull market. Commodities are in a bull market. I would say that fiat currencies are in a bear market.
Okay, wow, that's cool, super. Let's talk about inflation, because we really see it, we can feel it, and we know wood, timber, to build a house, for example. I read last week that the input costs for raw materials for one car just doubled the last 9 months. So what is your theme with the inflation? I mean, hyperinflation maybe not a theme, but the 4-5%, and are we in a transitory inflation, or is this, let's call it a real long-term inflation?
Well, if you listen to Madame Lagarde, of course it's transitory, and I think it's pretty interesting that now they are even stepping up their game. So they are increasing purchases because they keep telling us it is transitory. Our point, and that's basically the main takeaway of this monetary climate change report this year, is that it's not transitory, and there's actually a paradigm shift going on. I think we're seeing that most inflation-sensitive asset classes, be it commodities, commodity currencies, are already telling us that inflation is here. We're seeing it in almost every inflation indicator. Last year, in one of our 10 forecasts, we said that inflation in the US will go to 5%. We're seeing it. Everybody said, well, that's impossible. Now we're seeing
it's
it.
There.
The Federal Reserve keeps telling us it is transitory. It will come back. But it is actually exactly what central bankers and politicians need. They always told us that they want to see more inflation. Now the big question is, what if it's not transitory?
Yeah, what happens then?
what will they do then?
Yeah.
I mean, I think if they should, I mean, now we are seeing that they start thinking about tapering. The market saw that the last press conference by Jay Powell was slightly hawkish, so perhaps by the end of the year 2022 they will start raising rates. I don't think so.
Nobody can pay for it.
They start considering tapering of their quantitative easing, even though the economy really is in full swing. So it is a trap that they are in. They painted themselves into a corner, and that should provide a really positive environment for gold. It feels a bit like this movie with Macaulay Culkin, Home Alone.
Yeah.
So the market, I think, one day will wake up and say, well, my parents aren't here. We need more fiscal stimulus. We need more monetary stimulus. Of course, now I think the Federal Reserve cannot make a big U-turn and say, well, okay, the economy is not doing so well as our models say, and even increase QE and stop thinking about tapering. So it is a bit of a trap. And I think that right now we're seeing a bit of the calm before the storm. I think it's going to be a very interesting autumn and fall.
Absolutely. So a good hedge on inflation is, of course, physical gold, silver. That is for sure. I think stocks in general, value stocks, good stocks in general is a good thing, but also mining stocks, right? I mean, the big producers or even the mid to small producer sized, they are all earning money like unbelievable, and they have PE values in the single digits. So a lot of them are paying dividends, right? And I saw in your fund you have Sibanye-Stillwater, you have Copper Mountain Mining, for example. You have some big BHP, I think, is also in it, right? And Rio Tinto, all good dividend payers, which are also in my portfolio. So what's the take on that?
Yeah, I mean, making money and low PEs and paying dividend, that's a bit old school.
Yeah.
So I think this whole mania in markets continues, and it's only a consequence of all this monetary madness. I saw, for example, that an Italian artist sold an invisible sculpture for like, I think, 16,000 euros.
Yeah, I think it was 18 even, yeah. Jesus.
I don't know if the delivery is included, but it is a sign that there is way too much money in markets, that there's way too much liquidity in markets. And therefore, unfortunately, I think that investors don't realize the enormous potential of the mining space. Yeah. We did 120 company meetings last year. Most of them were extremely positive. Companies are producing an enormous amount of free cash flow. They're raising dividends. They are buying back shares. Some of them got low single digits of PE ratios. So I think it's a great setup. I think that that we will need for some tailwind, we will need rising gold prices again. I mean, last year at this time of the year, gold was trading at 1800. The gold bucks index, the HUY, was at 350 or 360. Now we are at 250, even though the companies had their most profitable year in 2020. And I think that 2021 will be even better. So those companies got significantly cheaper. For us, it's a great buying opportunity. Yeah. But at some point, the market will also realize.
Absolutely. It's like a no-brainer. Let's talk about Tudor Gold. We got a lot of emails, phone calls, also from Canada, from the US, through Commodity-TV after my interview with Ken Conkin. And you have discovered one of the largest, or even the largest, probably gold resource in the last 30 years, I would say. So what's going on with Tudor? Maybe you can give us a little bit of an insight here.
Sure.
And why is the stock price so low?
Well,
this is what I hear every second day.
It's all relative. I mean, in 2017, when I joined as an advisor, the stock was trading at 20 cents. We went up to $4. Now we're at $2. What we achieved during that time is unbelievable. In February, we announced one of the biggest resources of the last 30 years. 19 million measured and indicated, and 7 million inferred. Yeah. In British Columbia. So it's the second largest resource in British Columbia. Only Seabridge is bigger. Now, for this year, we've got a very, very ambitious plan. Our guys are drilling like crazy with 6 drill rigs at the moment. We try to find the limits of the deposit. It's so big, it's really unbelievable. But we hope that we at some point will find the limits. We will do lots of infill drilling to convert the inferred resource to measured and indicated. So to have like 27 million in measured and indicated. Ken keeps telling us, and he's really one of the best people that I've ever met in this industry.
Absolutely.
He says he can find an ounce of gold for $1. So we're spending an enormous amount of money on drilling, but I think it's well invested. We will spin off Goldstorm metals. So every Tudor shareholder will get 0.25 shares in Goldstorm metals, because I think the market doesn't realize the potential of the crown properties. It's fantastic. If you talk to Ken about that, I think you will see that this could well be another 3D Creek. So there's quite a lot of positive things going on. We've got a very stable shareholdership with Walter Storm, our CEO, and Eric Sprott. So I think it's a great buying opportunity at the moment. You can have a look at the insider filings. I bought more stock over the last couple of weeks because I'm extremely relaxed and very, very confident. So yeah, all good on this side.
So if you are buying, I buy also more, because I'm also a shareholder of the company for disclosure reasons. But that's really interesting to hear, and I think you're on a fantastic path to do so with Ken. I interviewed him some 4 or 5 weeks ago, and I was also totally flashed what he was telling me about. And yeah, looks all good. Last theme. Bitcoin. What a bumpy road, I would say. 64,000 top, now 30,000. I read a chart comment that it might break through to 20,000. But Bitcoin, gold, you can have one or the other or both. Makes sense? Like in your fund?
Yeah, you can have a redhead and a blonde. I mean, our wives wouldn't appreciate that, but my analogy was always you can have a stable and safe SUV, but also a fast Ducati motorcycle. Why not have both?
Yeah.
We should not forget last year when we talked here, the price of Bitcoin was at 10,000.
Yeah.
We went up to 64,000. Now we're trading at 30,000. I think quite a lot of positive things developed in the meantime. We're seeing that Bitcoin really grew up. We see lots of institutional money kicking in. We're seeing that the whole infrastructure is getting better and better. So I think there's still a great case for Bitcoin to be made. And I think it's not, the rivalry is not between gold and Bitcoin. The rivalry is between sound money and fiat money. And from my point of view, you know, gold's inflation is at 1.6%, so the stock to flow ratio is extremely high, and it's pretty similar with Bitcoin. So both are non-inflatable assets, and that's what really counts in a world where it seems that liquidity is without any limits.
Fantastic, super. That was a great final word. Ronnie, thank you very much. I think we got to jump in that lake now,
Yes,
because
I'm sweating.
I need some cool down, to be honest, and later maybe a glass of white wine or maybe a bottle. And let's continue with the vacation. Super.
Absolutely.
Thank you very much for
Thank you
the
very
interview.
much.
Thank you.
Take care,
Yeah,
bye-bye.
ladies and gentlemen, that was Commodity TV for you with Ronald Stöferle, co-author of In Gold We Trust. You can hold it up again, please. And I really urge you to download that fantastic report from our website, from Ronnie's website, Incrementum AG in Schaan, where he is also a managing partner here. And yeah, I must say, gold, silver, still all looks good. Commodities look fantastic. Most of the mining companies are totally undervalued with PEs of one, as meaning in the single-digit universe, which is outstanding, paying dividends, and nobody loves them so far, really. And I think there's a lot of potential for the next years, to be honest. And if I look at the prognosis from Glencore, from Trafigura, also for copper, but also for silver, for example, with the big new Green Deal from Joe Biden in the US, I think we are in a golden decade, golden for gold, but also golden for really the commodity prices. And yeah, why not have precious metals and Bitcoin together, like he said, Ducati and a nice SUV? I think it's a great idea. So check it out. Thanks for watching us, and bye-bye from Austria and Lake Wörthersee.
See ya.